Jacob had big dreams of developing a tourist lodge in the Tweed Valley, but a serious accident meant he couldn't work. He tried to sell the property just after the global financial crisis, but it was repossessed by the bank.
We lost all the hard work of 12 years doing up the property to a real magic place. That's what we lost. And we ended up in a caravan.
Jacob's story is one that consumer advocates fear could repeat itself. The federal government is looking to wind back responsible lending laws, arguing ample protections are still in place.
Under the government's plans, banks and other lenders wouldn't need to do the same amount of checks and verification to make sure that loans are affordable and suitable for people.
Katherine Temple is part of a coalition of consumer groups. They've written to financial regulators, urging them not to axe the laws.
We can see a debt disaster on the horizon for many people who could take out more unaffordable loans as a result of these changes.
Property prices in capital cities rose 2% last month. In Melbourne, homes are just 1% below their pre-COVID peak. And in the country's biggest market, Sydney, values have risen more than 5% since last October to a new record high.
General inquiry in the last 6 months has been busier than I've had in the last 16 years of being a mortgage broker.
Sydney-based mortgage broker Terri Unwin says low interest rates allow people to borrow big, but banks are still verifying whether they can afford the repayments.
Banks have reduced what they were assessing loans at. So in 2018 it was closer to 8%, now it's closer to 5%.
Hi John, how are you?
Helia Singh is another mortgage broker who works out of Perth. She's warning her customers not to get in over their heads.
Especially now that the responsible lending is ending, people need to be aware about responsible borrowing. So that if banks is going to give them money because of the borrowing capacity, doesn't mean that they should go and get that much money.
The Reserve Bank's been modelling what could happen if house prices fall and unemployment rises. It's even looked at a scenario of a 40% drop, saying it's extreme but plausible. It says at the moment most people with mortgages can afford it, but that rising household debt is a huge financial risk.
The basic problem in Australia is that we have very expensive housing, and of course going hand in hand with very expensive housing is very, very high debt levels. If you look at the ratio of household debt to income in Australia, it's running at around 200%.
AMP Chief Economist Shane Oliver worries that at some point down the track, interest rates will rise and people will be unable to pay their mortgages.
With the removal of the responsible lending obligations and of course a property boom underway, the risk is that those lending standards will be eased and people who maybe shouldn't have got a loan will end up getting one.
We know that 2 in 5 Australians are already struggling to pay their bills during the COVID crisis. We don't want to see easy credit being used to tide people over in a way that's eventually just going to lead them into further and further financial hardship.
It's a situation that Jacob knows only too well.
Dream of a beautiful house, but don't overdo it. Don't be greedy in your own little circle.
It's advice that many home buyers will find hard to follow as competition heats up in the housing market.